Okay. So what is a credit report, right? So a credit report has all of your information. It has your demographic information, your name, date of birth, social security number. But it also has every creditor that you've ever opened up an account with, right? And so that's why it is extremely important for you to review that credit report so that way you're able to see what's on it. So we can go to the next slide, please. All right, so think of your credit report as a resume, right? When you're drafting your resume to apply for a job, you're trying to spruce it up, make yourself look presentable to these people who you want to become employed with, right? So do the same thing with your resume. So what does your, with your credit report. So what does your resume say about you, right? So usually you try to make sure that you note in there that you're stable, that you've had employment over a certain time. You want to do the same thing with credit, right? You want to show that you are able to maintain some type of credit with at least a year or more, right? You want to show that you're prompt, right? That you're able to pay those accounts on time. No one wants a late employee. No one wants to give someone credit who's always going to be late, right? It's almost like, right, Claire? It's almost like that instance where you let a friend borrow $20. They're like, oh, I'll give it to you Friday when I get paid. And then you're like, okay, Friday comes, you don't get your money, you know, so you're like, all right, I'm not going to let them borrow any more money. You know, so it's the same type of thing. You want to show that you have stability, that you're prompt, and that you're able to multitask. You're able to have a variety of accounts on your credit file that you're able to maintain. It's no use of you having all of these, a good mix of credit, but they're all negative, right? So next time you're looking at your credit report, look at it in the aspect of a resume, and I think you'll be able to understand it a little more, right? So, do you know what creditors are saying about you? You know, they're always gossiping, throwing things on your credit report, and you're like, wait, I didn't tell you to tell everybody, right? So it's important for you to pull your credit reports often, right? I always say stalk your credit score. Like we're always on Facebook and Instagram, you should be on your credit app the same exact way, right? So annualcreditreport.com, you're able to get one free credit report a year. Although with the pandemic, now they made it where you can receive your credit report for free once a week.
Oh, wow.
Yes. So please take advantage of that. People pull up their credit reports today. They pull it up tomorrow. Completely different information is there, right? You never know when you may be being a victim of identity theft, or you never know when creditors just are reporting things that are inaccurate. So another good resource is Experian.com. Now the difference between the two, annual credit report, you'll just get a really detailed view of your accounts with each creditor that you've ever had, which is good when you're looking for like specific errors when you really want to catch a creditor doing wrong. But they do not provide you with a score. Where Experian.com, you have the opportunity to pay $1 for a trial period, and you're able to receive all 3 of your FICO scores. So I recommend doing both, right? First of all, it's free for annual credit report, so we don't pass up anything that's free. So make sure you go to annual credit report, pull your report, get a highlighter, a Sharpie, a pen, and I want you to check for any errors, right? Name, date of birth. I had a client where he was a junior. His dad owed child support. The child support delinquency ended up on his credit report. He doesn't even have children, right? But because of the similarities in name and date of birth, it went on the wrong credit report. He didn't know until he was looking to repair his credit, right? So we're able to dispute that and get it off. So anything, if they're missing one letter in your name, is misspelled, highlight it, and make sure you update that information. Account balances, right? It's important that you notate and that you're aware if these balances are reporting accurate information. I have a client who made multiple payments to a car company, an auto loan, and they were refusing to update the balances on that. That is illegal, right? Everything on your report has to be valid and accurate. The creditors, do you know the creditors that are reporting on your account? Are the accounts yours? I have a friend who was receiving Victoria's Secret statements in the mail. She doesn't have a Victoria's Secret card, right? So that's why it's important to monitor your credit report and make sure that the people that are saying you owe, you actually owe.
Mm-hmm.
You know? All right. And also check for dates. The dates that you actually opened the account. Things are allowed to remain on your credit report for 7 years. Right? If something is, if a delinquency is up there and you've had it in college, it's now been 10 years, that should be deleted. All right. So those are the things that you should look for when you're checking your credit report. All right. So what is a credit score? So if you think of your credit report as your resume, I want you to think of your credit score as the references that they call to check up on you to see if you're going to get the job, right? So your credit score is a number that represents the risk a lender is taking when lending you money. So all those factors that we discussed, that I've mentioned about making sure that the creditors are right, all of those components is what make up your score. Anyone you've ever done business with, if you were late one time, if you were actually on time, all of that makes up what your score is going to be. What's the next slide? Okay, and there's various different scoring models when it comes to your credit scores. So you have the FICO, you have the Vantage. So they're similar in the aspect that they both range from 300 being the worst possible score you could have, right, to 850 being exceptional. We all want that 850, right? That's hard. That takes work.
800 Club.
Yeah, that takes work. So they all, that's the range of them. But if you ever look at your Credit Karma score, that is your Vantage score. If you go on to Experian, that is your FICO score. You'll most likely see a difference in those scores because of the way things are weighed differently amongst the two, right? So if you go into your FICO score, you'll see you may see like a FICO 8, FICO 9. Currently, FICO 9 is the most recent, but FICO 8 is what's being widely used with creditors. So that's what you'll see being implemented more when you apply. They'll check your FICO 8 score. Go to the next one. Okay, so FICO 10 and FICO 10T, these are the troublemakers that are coming out, right? So FICO 10 is going to focus more on your personal loans. I know some of you may have, I know a few people who have done this. When I didn't know any better, I was there, I did it as well. I took out a personal loan to pay off my other debt, such as like credit cards and things like that, right?
Yeah.
So the new FICO 10 score is going to impact your score more heavily if you've done that in the past. So you take out a personal loan, you pay down all the debt, then you rack up more debt, right? So you go back to spending those cards. FICO 10 is going to penalize you for that, right? Then they got fancy and brought out a FICO 10T, like FICO 10 wasn't enough. And they're going to focus on payment history, which this may be what helps people, right? So if you're the type of person who's always on time with your payments, you've never missed a payment, they're going to take a trend of your overall payment history of the last 24 months, and they're going to evaluate your score based off of that. So if you've been good with making payments, you're good. But, with the pandemic and everything happening, if you miss some payments, then may hurt your score a few points.
Oh, wow.
So, yeah, so that's going to be the news. Supposed to roll out this summer. However, we know that FICO 9 already exists, and a lot of creditors, they aren't using that yet. So it could take a good year or two for creditors to start implementing this score, this new model, and using it to approve or deny people. Okay. All right, so the credit scoring system. So I always tell people, 65% of what makes up your credit scores, you are in control of. Like, you have complete control of it. Your payment history, right? Your payment history makes up 35% of your score. Have you paid your past and present debt on time, right? And it also considers any bankruptcies, charge-offs, and judgments, or if anyone is garnishing your wages. All of that is taken into consideration, right? But if you make your payments on time, you don't miss any payments, You have, even if you haven't done that in the past, you now can control 35% of your payment history,
Mhm.
right? 35% of your score. So you have control over that piece to make that at least be exceptional if everything else fails you, right? So then we move on to the 30%, right? And that's the amount you owe or your credit. I like to call it credit utilization. So
Right.
that is the amount of the credit you're using. So say you have a $200 card. If you're using more than $60 of that credit limit, your credit utilization is going to be higher, your score is going to decline. So you want to make sure that you're keeping your credit utilization as low as possible. So that's the other 30% that you have in control of, right? So you know, if I have this $200 credit card, I cannot spend any more than $60 on that card, which makes, if you spend 60, that would be your 30% utilization rate. Everyone says, oh, 30% is great, but if you can get lower than that, that is ideal. 20%, 15%. We have to stop thinking of credit as cash, right?
Yeah.
That's the problem. When I was in college, I had Discover, I had Capital One, and I had my bags, I was going into Millersville, like, oh, I'm loaded, right? But it doesn't replenish itself. Like, you have to pay it back. And that's what I didn't understand. You know, at the time, it's like, okay, all right, I still have a couple more dollars on here, but it's not cash. You have to pay it back, and it will hurt you in the long run. Don't open up too many accounts if you know that you won't be able to keep that utilization low.
Yeah.
My recommendation is to charge like a Netflix account to the card. The idea is to build credit, right? So you start with a $200 limit. Your goal is to get a bigger limit. You can't do that if you're constantly using the small amount. If they see that you can't handle a $200 card, no one's going to give you a $2,000 card.
Exactly.
Right? All right. So the next one, the length of credit history. So that's basically how long have you been using credit? The age of your credit is important. Usually, if you have student loans, that's usually your oldest account,
Right.
right? But we're going to start changing that. We're not going to allow our kids' first account to be a student loan. What we're going to start doing is opening up a secured card in our kids' name, right? Well, you're going to open it up in your name. You're going to add them as an authorized user. You can do it with Chase, Capital One, or Discover. They also do secure cards. So, if your credit isn't right, you can't get approved, do that. We'll talk about that later. But the length of credit history is important, right? If someone had done that for us, we would have been set by the time we were 21, right? So keep all of those old accounts open because the length of your credit history is important. And you'll also see sometimes if you get your student loans consolidated, if your credit report only consists of your student loans and you consolidate that debt, that takes away your length of your credit history. So that's 15% of your score that's gone, and you don't even have anything else to kind of lean on, right?
Yeah.
All right, and the types of credit that you have. So in order to have excellent credit, right, it's only 10% of your score, but you still need to have like a good credit mix. So that means you need credit. You need to have like an open credit card, a store like a Capital One card, or then you need to have a store card. You need to have some type of loan, right? And all that takes time. That's why it's hard for people to accomplish an 850 score because you still have to keep in mind the length of credit history, right? Not applying for too much debt, maintaining everything. It's only 10% of your score, but as time goes on, it can really impact your score.
Right.
And the last one is the inquiries, right? I get clients all the time like, hey, can you get these credit inquiries off? And I'm like, that's 10% of your problem.
Right.
So where it's important, if you have a lot of credit inquiries now, just stop applying for credit, right? And I've been guilty of it too. It's like, I know my credit is bad. I know nobody's going to approve me. Why am I applying for that Get card? I was in the same situation.
Yeah.
So just stop applying for a new credit. Let those credit inquiries fall off. It takes 2 years for them to fall off. No one wants to lend to you if you look like you're desperate for credit, right? So just let those credit inquiries fall off and only apply for credit when you really need it.
Hey, Ro, I do have a quick question on the amounts owed.
Yeah.
So let's say, for example, you have 3 credit cards. You have one for $200, another for another $300. Let's say, do they look at the utilization of all 3 of those combined? So let's say you got like 60 on one card, 30 on another. Like, if you have more than one card, are they just looking at the utilization per account or overall? So
overall.
Okay.
Yeah. So add up all of your credit accounts, add up all of the debt that you have. And if you have, don't use 30% of that.
Yeah. Okay.
Right. Yep. So it's not just per card, right? So in order to achieve that, you would have to have 30% or less on each card.
Yeah. And I know, just to chime in, like all of this sometimes can seem like very scary, especially for people who haven't quite trickled into credit and exploring credit and getting it and feeling good that I can handle it. It can all be scary because you think about it like, oh my God, like I have to worry about how much you use. Then I got to make sure I pay on time. I got to make sure I have the right kind of credit. I know when I was in college, that was probably the most toughest part for me, because I think I got my first credit card as like a senior in high school, and it was the Victoria's Secret credit card. And just like every girl's first credit card, but I had a Victoria's Secret card, but I was like so scared. I would go buy something for $25 and then get home and pay it because I was just so afraid. And it wasn't until really growing up, like year after year, just understanding how to use it. So once I got my first car note, that's a type of credit. And then the older I got a major credit card, and I just kept, paying on time, trying my hardest as a college student not to keep balances and stuff like that. And then now, you fast forward 29 years old, and the credit limits that they give me on these cards, I'd be like,
that's for me.
But it's right. I was like, why are you guys doing this? But it's like they see your repetitive, okay, she pays on time, she does this. And even times in college where I'm like, I didn't have enough to pay the whole thing, I made sure I was paying on time, I was paying more than the balance. And they see that over time, and then you hit a point and it's just like nobody really tells you no. You take care of your credit and you put yourself in a position to literally have nobody tell you no. Somebody totaled my car. I got into an accident, an 18-wheeler totaled my car. I was literally months away from paying it off, having a car note. Totaled it. Most people would worry like, oh my God, now how am I going to get the car? I said, whatever. We handled the car, went into the dealership, and I pretty much could have got whatever. And it's not that I'm like a gazillionaire yet, but it's just a matter of when you take care of your credit and you show people that I can handle my money, they're like, cool, you can handle the money that we lend to you. So instead of looking at it as something scary, just look at it as, I just need to make sure I'm on top of my game and being on top of my money the same way that we seem to be on top of everything else in this world.
Exactly. And Kalia, that's a good point. Like, you were in college, but you see how it took years, like over time, you built up that reputation, on your credit profile. It takes years. So while don't be afraid, but also you can't be afraid to start, but also don't think it's going to happen overnight, right? So you can get all the negatives removed. You can look good, but it's all about that time. Like, people want to see, you can pay you on time for 6 months. They want to see what you're going to do for another year, 2 years, 3 years. Right. So that's a good point, Claire. Like, and I'm happy you had that discipline, because a lot of us did not, including me.
And I will say, I will be so transparent. I will be transparent. I didn't always have it, because I remember being in situations where it's just like, holy crap! Like, now I done racked up this debt, and now I have to pay back. So tax income time and stuff like that, where I could have took tax money and invested it or did something else with it.
Exactly.
It was like, no, all of it gotta go to debt. All of my free money was going to debt. So now when I get into a position, and now it's just like, okay, the only things that really go on my credit is like Netflix and Amazon and stuff like that. It's like, no, We trying to keep it low.
Yeah.
Because I've been in that spot where it's just like, yo, they are about to take all of my money all the time. And I think I got to a breaking point where I'm like, I am so tired of giving them all of my free
money. Exactly.
And then you add up all of the extra interest in money and stuff that you're giving them. It's just like, no. I love the power to be able to go and get what I want when I want and get approved for the things that I want. But I also like to have my money too.
Yeah. And that's what you have to do. You have to use credit as power and not think of it as money. It's not money. It's just saying that, yep, I'm responsible. Like I know I know some celebrities that deal with other credit repair companies who they're rich, but their credit is bad.
Yeah.
Right? So like you can be rich and still like mishandle credit. So that's why it's important for you to realize it now. Like, yeah, you may be way past your high school years, but that's why it's important for you to learn now so you can fix your own credit, but also tell your cousins and your daughters and your kids what it means to be credit conscious and aware of how you're using it, because that's where it stems from.
And even now, like with everything going on, and not to divert, but everything that's going on with, I guess the positioning of African Americans right now in our Black community, like guys, we need to take back that power and look in every aspect of your life.
Right.
In financial area, that should be one of the biggest places that you look and make sure you got your stuff together. Make sure you take credit. Yes, credit gives you power to be able to do stuff, do things. But when you can have that self-confidence, have that control over your finances, it then trickles down into other areas of your life. You begin to have discipline with your health, discipline in other areas. But I promise you, get your money right. That'll be able to open doors and create opportunities for you that nobody can close.
Exactly. And it's just one less stressor, right? Like there's so much going on. And look at when the pandemic hit, how many people lost their jobs, right? And were stressed about like how they were going to get groceries for that month, right? But when you take care of that credit, that gives you the power, like, okay, I can live off of a credit card for a while, right? Like that's not the ideal situation. You don't want to, because then like we said, you have to pay that back. But credit cards really are for those type of situations where you have no other choice. It's the last resort, right? So just be mindful of that too. Like it's never too late to get it right. It's never too late to start. And like the time is now, because I'll go into this next slide to discuss what's happening in regards to home buyers, people who are looking to buy homes. So your credit score impacts you greatly, right? Like we just discussed. If you have a credit score in the 500, your interest rate can range between 14% and 20%. Like ridiculous.
Yeah.
I'll never forget. Once again, I told you guys like I was bad with my credit. My first car went to the dealership at like 3:00 after work. Didn't leave until 10 p.m. Because when you have bad credit, they don't really worried about you, right? So, and not only that, they have to run your credit through so many creditors to get you approved. It's like pulling teeth, right? So then you look at your credit report and then you have all of these inquiries. I never forget, they tried to put me in like a Nissan Versa, right? You don't have options. You don't have the ability to choose. It's almost like beggars can't be choosy, right? You have to take what's on the lot of what you can get, because you're at this point, you're like, dang, my credit score is like a 560. I can't really get much, so, but I really need a car. So let's see what they'll give me. No, like when I increased that credit, you would have thought I went into Tesla or something, because I just went to Toyota and got me the latest. So I was able to choose. Like I was able to choose the color. I was able to pull tape off of the car. Like it's just a different. They treated me a little bit different. I didn't have to put a down payment, right? I didn't have to show a pay stub. It was just like, okay, let's run your credit, see what it is. It was in and out. I was so happy. Like it's really, you feel different.
Yeah.
It was like almost, I was in there like, okay, I need a car. But then I was like, I need a car. Like we started
a certain kind of confidence.
Yeah, different type of confidence, and then you have the power to say what you want to be in. I don't like anyone having power over me. So when you get that credit right, you're able to get like a better rate. I think I was paying like $100 a week on my first card. It was weekly. And then once you paid, I had to put like a code in the card. If you didn't pay, they turned it off. Like they don't trust you when you can't blame them. Like once again, it's like that friend that you let borrow money and they don't pay back. You're like, no, I'm putting you under lock and key. We're going to the ATM together so we can get my $20. That's exactly how they was with that card.
Jeez.
So yeah, so credit, I hate to say it, but it can control your life. And it's just all about it's about how you move. Allows you to move different. I know some people before the pandemic they were able to like buy um they were able to purchase homes with a credit score of 580, right?
Yeah.
So 580 was like, okay, okay, good, I can get a house. 620 was like, all right, you can be doing a little something with your credit, you're good. Since the pandemic, I have a realtor friend. Since the pandemic, lenders are changing that, where it's between 640 and 680 now, the minimum credit score.
Mm-hmm.
So just think about that, right? It went from 580, you're able to qualify, to now they're like, okay, we have to make sure we're going to get our money back. The pandemic happened, people have lost jobs. They're raising the requirements for us to be able to purchase homes. You don't want to be renting forever. If you want to rent, hey, but you want to be able to have the choice of buying a home. You don't want your credit score to be the reason why you don't get approved for that house that you want.
And
So
again, with this, and just to give you guys like background on like what it was then versus now, like
right.
when I bought my first property at the age of 24, and it was the process was seamless. I closed on my home in 30 days. Credit was good, whole nine. And then it wasn't even, I don't even think it was like in the sevens yet. And it was still seamless. Now hearing people going through the house buying process and stuff like that, is just like mind blowing. And if you think about it, it's just like, all right, well, why is this pandemic really changing things? You got to think like, it was breaking news the other day that, look, we are currently officially now in a recession.
Yep.
If you guys remember when the recession hit, like back in 2008, interest rates went down. People were like buying homes out of nowhere because it was easier to buy homes. Well, this year, the banks and stuff is like, we're not making that same mistake. So yes, interest rates might be a little bit more appeasing, but the entry point, the point in which you can actually get in, and the people that they're going to be approving, they are going to be way stricter. So get your money right, so that way you're one of the people that they actually let in. So it is so important, because again, credit is power in some ways, and that's one of them. So that way, when the world decides up, we're going to shift, or we're going to go into recession, you got other things that you can worry about besides your financials and your credit score.
Yes, definitely. Like it's just crazy. If you thought it was hard, like you said, Kalia, like the interest rates, they're so appealing. You're like, oh yes, But the requirements, and I think certain loans are now like requiring you to have 10% down. It used to be like, oh, 10% is great if you have it, but now they're like, no, if you don't have that 10%, like we're not doing business. So it's definitely important for all of the home buyers who are on, and something to take into consideration.
Definitely.
Also for, I don't know if we have any small business owners or potential small business owners out there, right? Your personal credit must be in order before you can apply for any type of business credit, right? So everyone is like, oh, when are you going to do something on business credit? And I always say, well, what does your personal credit look like? Because it's important. You go to apply for something and you're a new business. You don't have a reputation yet. You don't have business credit established. So they want to know, how do you manage your own credit, right? So if you're a risky borrower with your personal credit, they're less likely to approve you for business credit.
Yeah.
So that's definitely important.
And that right there, it can be so discouraging too, because you have this dream and you want to reach out and do it, but there are certain businesses that require that capital up front, and not everybody has, the family that'll be able to dump all the money into them and stuff like that. And there are some companies that and these aren't, I'm not talking about like the big guys, like Wells Fargo, Bank
Right.
of America, all of that. They're going to check your personal credit. But there are some like smaller banks that are, you know, rarely talked about that may still give you business credit, but it's going to come with some penalties. That
Mm-hmm.
interest rate going to be crazy. So it's just like understanding that you got to get yourself together first. I know if anybody has ever heard me speak somewhere or have been on one of my webinars, you know, my whole basis of what I do with being a life coach and a business coach is that before you step out in this world trying to do this business thing, trying to impact people and, you know, make a name for yourself, make sure behind those four walls of your personal life is taken care of, because you have to be right within before you start pouring out. The same with your finances. That personal finance, taking care of that not only opens personal opportunity doors, but then now you got business opportunity doors that you can open. So it's just like, cool, as a new business, you want to get this brick and mortar building, you want to do this, or, you know, you want to invest in, you know, new trucks or whatever it is. The first thing they're going to do is say, okay, you're new.
Exactly.
Let's look at, you know, your personal credit. And if they see how you're doing, they say, bet, we'll give you this line of credit. I feel like every, for me at least, I feel like every business should have some sort of a line of credit that you can go to as an emergency if you need it. But you need a credit score in order to get that.
Exactly.
You know, so please take care of your personal, because that'll open doors as well for you as a business.
Right. Even when I applied for like a Staples card for the business, it was like, oh, hey, okay, put in your personal credit. And I was like, all right, you know, like, and, you know, like, oh, wow, I wasn't expecting Staples to do that. But it's a lot of people, Amazon business, like they all want to look at you first. And it's only right? Because you're a representation of your brand.
Exactly. Even your finances.
Yep, exactly. All right. So first, Kelly, let's do the poll. Let's see if people are here to rebuild their credit or if they're looking to repair or improve.
So, guys, in the chat, because our polling is kind of acting funky.
Oh, it's not working.
So, in the chat, let us know what you're here for. Are you here because you're interested in building your credit, you're interested in repairing your credit, or, you know, let us know why exactly you're here. It'll take a couple seconds.
Yeah.
Put it in the chat.
Okay. We have repair.
And don't be afraid, y'all. We are here to do something.
Yes. Do not be ashamed. Like, that's the first thing I tell my clients. Like, listen, do not be ashamed. You know, a lot of times you think you're better, you're worse off than you are. I look at reports, I'm like, oh, okay, you just need to do 1, 2, 3, and your story begins. Like, really, that's it? It's just all about not being afraid to ask questions.
And that was key. And I was talking to somebody, and, you know, they were telling me how bad their credit was and this and that, and I want to be a homeowner, I want to do this and I want to do that, but my credit is holding me back. And I asked them, like, you know, well, they hadn't tried to do any of those things because they knew they were in a terrible position. They went and told me their credit score. I was like, that's not that bad.
Right.
Like, I was like, you're not that bad of a position. It's just that it's so easy to compare and think. Everybody nowadays, they screenshot their credit scores. I'm in the 800 club. I'm doing this. I'm doing that. It could be some things that you can get off your report and work with, but that's why we have people like Romaine, so that way we can get to those higher ranks. But I promise you, you're probably not as bad as you think you are. And if you are, we got you. So we have a lot of, in the chat row, we have a lot of repairing and rebuilding, as well as just simply improving. Yeah.
All right, good. Okay. All right, so let's talk about how to improve your credit first, right? So we discussed earlier how important it is for you to review those reports. We'll recap in case some people joined on later. So annualcreditreport.com, you can get it once a year, but through the pandemic, you are able to pull those credit reports, detailed credit reports, once a week. So I highly recommend that you log on to that website, get your credit reports. And I also recommend Experian.com. Pull your credit reports from all 3 credit bureaus, because a lot of times your score varies because certain creditors don't report to all 3, right? So your information may vary in each report, right? Look for inaccuracies. inaccuracies. Look for things that are not right. Highlight them. Dispute any of them. Dispute all of them. Now, if you have about 20 inaccuracies, do not dispute all 20 at one time. That's going to get you like, they're going to do this to your dispute and mail it back. Like, yeah, don't do more than 8 to 10 at a time, right? And also, I see a lot of people, oh, I disputed on Credit Karma. No, do not dispute anything on Credit Karma. I experienced doing this new thing where they're like emailing people once they receive a dispute and like, hey, you can check on this dispute online and you can dispute other accounts online. Do not dispute anything online. When you do so, there's so many pages that you go through and they say, hey, click this box. And then before you hit submit, now how many of y'all read that box? None of you. Is giving away your rights. A lot of your rights and your and like a lot of the laws around credit repair, you're throwing all of that out of the window when you dispute online. So just if you want to do, I always say, even though I'm a credit repair company or business, I always tell people you can do this yourself. Like it's not rocket science. It just requires time, patience, and you have to be very detailed. You have to know what to do, what to say, right? Mm-hmm. So never dispute those negative accounts online. And don't think that just because, yes, it belongs to you, anything can be disputed on your credit report. Anything can be removed. You'd be surprised at what's reporting wrong.
Yeah.
Right? So that's another way to improve. Dispute all of it. That's not right. Don't just go saying, and don't dispute saying it's not yours and you know it's yours. That's not what we do. That's not going to get it removed. Don't go filing false police reports stating that you had identity theft. If it really did not happen to you, you will end up in jail. You cannot use your credit in jail. All right? Please, I don't want to see your, I don't have money for your books. See, I told you, like, no, don't. All right? And lower that credit utilization. Whatever you have on your card, if you have multiple cards, right? Make sure that you are not using more than 30% of your overall available credit, right? Lower if you go as low as you can go, right? You can do 15% of that. If you can do 10, just make sure you're not exhausting all of your available credit, because then you could have a 700 score, right? You use 60% of your credit, available credit. You can drop your score about 50 or 60 points just in that 1 month alone of overusing your credit card, right? And we all know credit can sometimes be a little game, like the pandemic. If you had to use that card, make sure that you were able to kind of pay that back before it reported back to the credit bureau. Get that utilization back to where it needs to be.
Right.
Right? And pay down valid debt. When I say valid debt, I mean, if you look on your credit report and, Comcast is threatening to show, I hate Comcast. Nobody works for Comcast. I heard that. And Comcast is threatening to report to the credit bureaus on your, return the box, please.
Yes.
In the remote. Return it. It is not worth it going on your credit report. That's what I mean when I say pay down valid debt. If you have a credit card and it's 110 days past due, that soon it's going to go as a charge off. Call those people, make arrangements then. It is easier to pay them before they hit your credit versus when they hit it. Now you have to pay for delete letters or trying to get it removed. It's just a headache. So pay down any valid debt before it hits your report. All right? And avoid late payments. That's, just avoid them. If you have to set reminders on your phone, set up auto pay, just try to pay them before the due date, the day before, because I'll tell you I have a Justice card, and if you have to read, I'm good for like reading fine print when it comes to like the credit card. If you pay after 5 p.m. on the day that it is due,
it goes to the
it's considered late. Yes. So I always recommend if your due date is on the 3rd, pay it on the 2nd. Like just always be ahead of the game. Don't let them catch you slipping. All right. So steps to building credit for everyone who's looking to build. Once again, keep all of those old accounts open and active.
Yep.
I don't care if your kid is 35 and you have a Children's Place card. If that's the oldest account, you're going to find some socks or something from Children's Place.
But buy for your grandkids.
Yes, just so you can use that card and keep it open. Keep it open, keep it active.
Yep.
If you don't use it, they will take it from you. So buy a pack of gum, buy something. But if it's your oldest account, do not close it. Keep it open. All right? And apply for a credit card. I was speaking to someone today, and they were like, I'm not looking to buy a house. I'm not looking for a car. I don't need a credit card. But you do. Like if you want to achieve your goal score, you need a credit card reporting on your report. Okay? So apply for a credit card. Apply for a secured loan. You can get these with your bank. They'll use money that's already in your account as collateral. If you don't do it through your bank, there's also something called self-lender. I often refer my clients to that. It is a secured loan that reports to all 3 credit bureaus. And what you pay every month, you can choose your limit, but I always say start with $48 because then it goes for a year. You pay it for a year. And I've seen people scores jump 35 to 50 points just by opening up that secured loan and keeping it active and paying. And after that year, they'll send you a check with your money back. So it's like you boosted your score, right? And it's a savings account. It's like a little savings account. At the end of the year, you get a $500 check with money that you saved that you would normally spend on Uber Eats. I'm guilty of that.
Right. Yeah.
So that's a good way to build as well. And also just always keep up with payments. If in the past you've missed payments, like start this month. Like I'm not missing any more payments after that. Like Talia said she did in college. Sometimes she couldn't pay off the balance, but she made sure that she paid at least that minimum, and that's important. All right, and this one here, do not apply for subprime cards, and we'll go to the next slide and discuss what subprime cards are. All right, so that's your Indigo, your Credit One, who has a misleading logo, who looks like Capital One a little bit.
Sure does.
Right? Yep. So don't get caught up. Your First Premier, do not. I repeat, these are credit cards who they say are for people with bad credit.
Yeah.
It really rips you off, right? So the annual fee is anywhere between $75 and $99. You don't get any perks. There's no cash back, anything like that. The limits are low, like $200, and they're not generous with credit increases. They will, before they give you a credit increase, they'll offer you another subprime card.
Oh, wow.
Right? Yeah. And a lot of times, once you apply for this First Premier Indigo card, oh yeah, you're approved, right? You get this card in the mail, you open it up, and it's basically a bill because you owe at least $100 off the bat because you have to pay your annual fee up front. So do not look out for these cards, y'all. Do not apply for these. You're not that. Don't fall for it. Don't fall for the trap. Instead, you want prime credit cards, right? So that's your Discover, your Capital One, of course, Amex. I don't really speak about American Express to my clients until they can like demonstrate positive credit behavior, right? We don't even want to get into the charge card, and you have to pay that sucker back in full each month.
Yeah.
But your Discover, I put Discover over Capital One because through my time of doing this and through my personal experience with Capital One, they'll give you a $300 limit to start, right? If you have an okay credit score. Then they may increase it to about 500 limit after a while. But after that, it's like you kind of have to beg them for an increase unless like your score is top notch, right?
Yeah.
Where Discover, I've had encounters with them. Okay, you can start with this low limit, $200 or $300. After you show them that you're good to them, they'll be good to you, and they'll increase that score like from $2,000 to $4,000. If you're good to them for at least 6 months, you can look for a Discover increase within a year of you opening up that card, right? You get cash back. The more you spend, the more cash back you get, but be careful with that, of course, with the utilization stuff. But you can use that cash back to actually pay your balance,
I
to
did
pay
that
part of your
before.
balance. Yeah,
Yeah.
yep. You can use that for Amazon gift cards, and you get people things for Christmas for free, basically, just by using your card and paying on time. And there's no annual fee. I love it. So you want to get those cards. Now, if you're like rebuilding your credit or trying to improve your credit, and you can't get approved for an unsecured Discover or Capital One card, shoot for one of their secured cards.
Right.
I once again recommend Discover because you have the opportunity to check for pre-approval first before they check your credit score.
Mm-hmm.
So you can go to their website, look for a pre-approval. They'll tell you right there, yay or nay. If you are accepted, if you are approved, you have to submit a deposit. Whatever the amount of the deposit is the amount of your spending limit.
Mm-hmm.
So if you submit a $200 deposit, you'll have a $200 credit limit. Make sure you make all those payments on time and keep the utilization low, and you'll see hopefully you'll get your deposit back. With Discover, you'll get your deposit back, and they'll increase your score.
Oh, awesome.
Yeah. All right. And if you get denied for the secured card, don't worry, the credit bureau got you, right?
Yes.
So
Yes.
if you get denied for if you're exhausted all of your options, see, I partner with the credit builder card, but I still always send clients to Discover first because I know they're going to get higher increases once they do good with Discover. But if all else fails, you can't get approved. I am an affiliate with the credit builder card. You can go to my website. You can apply there. It's guaranteed approval unless you have credit, not credit, unless you have child support on your credit report. Child support. If you have that, then they'll deny you. But if you're good, you don't have any of that, you'll get approved. And I'm able to see the portal. So if you have any questions or if anything's wrong with your card, you can reach out to me if you apply on the website. So there is hope. If Capital One and Discover deny you, we can guarantee that you'll get a card.
Awesome.
So you can build that credit.
We will send this information to you guys as well.
Mm-hmm.
So you will have this to be able to, go back and look at it.
Yeah. And before we go into the Q&A session, I know with everything going on, a lot of people, even if you have good credit, right, you're just trying to figure out like how to protect it. Or I don't have excellent credit, but how can I protect a little bit of credit I have during this time? Like I can't afford a late payment. Once again, do not be prideful. Contact your lenders for help. Believe it or not, they don't want to see you with a repo or because now they have to go through all the hassle of getting that car, the reselling it. So contact them. I know a lot of them were offering like 3 months extensions. So if you're having a difficult time during COVID-19, call them, let them know. They'll push your payments back to the end of your payment schedule, and it won't report to the credit bureaus as negative. Okay. I know a lot of people who they may have furniture under a lease. I had a client with that, and they actually listed it as a natural disaster. So they signed up for some type of insurance with their furniture lease. So now they don't even have to pay.
Oh, that's cool.
During this time. So just contact your lenders. They do have options for you, and they are there to help you, even though sometimes we may believe that they're only there for the money. It's beneficial to both of you if you contact them. Yeah. And any bills that you're currently able to pay on time, please pay your bills on time. Like I know, even though PICO and PGW, they don't report every month, but best believe if they cut you off and you go into collections, it's going to be on your credit report. So continue to pay your bills on time. If you can't, reach out to them and also ask them for help. I know there's a lot of resources out right now as far as like PICO and PGW. So look into those and set up payment arrangements if you have to. And once again, check your credit regularly. See what's going on with your credit reports. See if anything's being added, if anything's being deleted. You'd be surprised. Some accounts you forget about, you look, it's been 7 years, it fell off, your score increased 34 points. So checking your credit doesn't have to be a scary thing, right? But you just have to do it.
Definitely.
and stay alert, right? Be mindful of fraudulent things. I had a life insurance company constantly calling me like, oh, you and your husband had this life insurance plan. I'm like, we didn't have that. And he called me like every day. I'm like, we didn't have that. But people are scamming right now,
Yep.
right? They're scamming. So stay alert. Don't just give your social security number out to anyone. Just be mindful of who you're speaking to. If someone call you from like what looks like a regular number, because everyone's working from home at this time,
Yeah.
okay, can you send me an email with your that has your company's signature on it, or can I call into you? So just stay alert and be mindful of that.
Yeah.
And make a budget. If your money situation has changed since COVID-19, create a new budget and just try to stick to it. Look at things that you can take out that you would normally do. I know a lot of people think that we're actually saving some money. Everything was closed. So I know me, I couldn't get my nails done. My hair wasn't done. We couldn't take the kids out. So just reshape your budget and make sure that it's working for you right now. And I know some of our stimulus payments may be gone, or some of us may not have even received them, depending on your president. But be smart about your stimulus payment when you get it,
Yeah.
right? My grandmother always used to say, "You can't miss what you never had." We wasn't expecting to get a $1,200 stimulus payment or more if you have children. So invest that money into yourself. Like if your bills wasn't impacted and you don't have to use that to pay, your current, use that to pay down past debt. Pay those credit cards off. You know, use it to invest in you. If you were looking to repair your credit, okay, then Romaine said get a secure card. Put $200 on a secure card. So just be smart about that stimulus money, y'all. Don't just be. If we get another one, definitely invest it. Save it for a down payment towards your home, or put it. Just save it. Invest it.
Do. Please do that.
Yeah, yeah. Because COVID-19 was real, and we never know when it's going to come back.
All right,
Or
guys.
it didn't
So
go anywhere, really.
we have some questions,
Okay.
and I want to make sure you guys get your questions in and you get your questions answered. So, a question that came in: Can two credit reports report the same debt?
Can two credit reports or two creditors?
Two creditors, sorry.
Oh, that is illegal. So two creditors are not allowed to report the same debt. So I highly suggest you go and dispute that information and get that removed.
Awesome.
Mm-hmm.
I'm putting the answers in for you.
Okay.
Awesome. Hold on. What is the difference between a credit card and a charge account?
Yes. So a credit card, you don't have to necessarily pay your balance completely off each month.
Mm-hmm.
A charge account, like an Amex, if you spend $1,000 in that card that month, it has to be paid off.
Yeah. And
so be careful with that.
One of the things, if people are interested in like American Express cards, and you're actually to that point where you can manage and afford an American Express card, one of the good things to do is look at what you would do on a monthly basis, regardless, whether it's grocery shopping, putting gas in your car, stuff like that. Do that stuff. So we have a family member, and that's what he's done for years. He has an Amex. They'll go buy groceries. They'll put gas in their car. They'll do all of that. And then they know they'll have that money to be able to pay back right at the end of the month because they would have did it anyway.
Exactly.
Another question says, how long does it take for your credit score to go back up after it drops?
It depends on the reason why it drops, right? So, and you'll see this a lot. So your credit score can drop 60 points for missing the payment. Or let's say utilization, 60 points because your utilization dropped. You can pay that utilization back, but you may not get that full 60 points back. So that's why it is important to try not to allow your credit score to drop for reasons that you can control, because it's always harder to get those points back.
Got it. There was, hold on, there was another one. Oh, so it wasn't really a question, but a comment.
Okay.
And a participant wants to know, she wants to reach an 800 credit score. Her score is always normally 720 to 750. Like,
Okay.
what can she do to get that to 800? Why does it only keep staying in this certain range?
Okay. That can depend on a lot of factors, and I would really have to look at your credit file to provide you with an accurate answer. And I'm also offering everyone on tonight like a free credit consultation if you want to just, there's no commitment for you to sign up. With a lot of you may not even need repair. So I always give free advice. If it doesn't require repair, I'll be more than happy to look at your report and see if there's anything you can do to get you to that 800. It could just be time, like Clea and I said, like just paying things over time and maintaining that good behavior. So if you email me, we can discuss it further.
And please, guys, please take advantage of what Romaine is offering. If you really want the help, I don't care where your credit score is. If it's at a 700, but you're really trying to make it to the 800 club, use these resources. Just the other day, I was talking to a client of mine who I referred to Ro in, I think, February. And she was like, yo, my score is up 104 points. I'm like, what? But Ro is giving her tips, giving her things to do, and she's being very disciplined on it. And she's going to be able to reach her goals way far in advance than she thought she was. So utilize what Romaine is offering. And I will actually put up her information right now for you guys. Hold on, give me a sec.
And guys, also remember that everyone is different. And I think I used to post a lot of like increases and like accomplishments of clients on my Facebook and Instagram page. And it's not that they're not happening. It's just that you already know that a score can be increased, right? But stop comparing your situation to other people's situations and just really focus in on what you need to do. Because a lot of times you can get into like a deep, deep depression of, like I'm working on my credit and someone else is working on their credit and it went up 104 points, but it's not happening for me. Everyone's credit profile is different and it just takes a different approach and different time frame. So if you want to take advantage of the free consultation, feel free to text. Well, I prefer email, but if some of you guys already are comfortable with texting me, text me. We can set up a date or go to my website, creditthrower.com, and you can see my availability and put yourself on my calendar. And we can pull your credit reports together. Yeah, that would actually be the best way because we'll be able to see what works for both of us. So we can go over your credit report together, set some goals for what you need to do, see what you need to do to improve it. And I'm really excited to work with all of you guys, even if it's just for advice. So don't be afraid to reach out. Don't be embarrassed. Like you cannot be embarrassed. Be embarrassed if you're doing nothing about your credit at this point.
Exactly.
Yep.
So guys, that is all that we have for you. If anybody has any last minute questions, there's about like a few minutes left that Ro has that we can answer any last minute questions. Other than that, we will be sending you her contact information so that way you can reach out to her, put the schedule on her calendar, and get what you need done. Y'all don't wait. What somebody said, what about medical bills?
Medical bills, yes. So medical bills, everyone say, oh, well, medical bills doesn't impact your credit score. It does. Some of them, depending on the model, FICO 8 or FICO 9, medical bills will impact it slightly different or slightly higher. However, medical bills can be deleted based off of HIPAA laws. So just be mindful of that. That is not something that has to remain on your credit report. Because even if you pay it, it's still going to remain there. But due to the HIPAA law, you can get medical bills off.
Awesome. Yes, they will send you to collections.
They will for a $25 radiology bill.
Yep. So just pay it. It's annoying, but just pay it.
Yeah, just pay it.
So guys, I am glad that all of you joined us on this webinar tonight. Things will be changing. I know they just announced the recession, but this is just the beginning of it. People were tired of staying at home. Now they're outside. They think it's over.
Right.
We are just starting. with a whole new thing that's about to arise. So get prepared, get your money right so that you are ready. Get your money right. You are ready. We are here to help you. We are here to help you, and we are excited to help you as well. So we will email you all of the information that you need, and please take action. We put it out there. If you don't take action, that's your fault. But we are here to help you. Thank you so much for joining, everyone. If you have any questions for me, you guys already know how to reach me. You can reach me at, KaliaDeborah.com, dreamstofounder.org, or on social media. You guys know how to find me. We are here to help. So again, thank you. And thank you, Ro, so much for your time. I know you have family and everything, and this is late, but I still thank you for your time, and I know we all appreciate it. So you guys have an amazing weekend, and we're here if you need you. If you need us.
Thanks for the platform, Kalia. I really appreciate it.
You're so welcome. All right, guys. Have a good night.
Bye-bye.